the media. This is that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender. Lynda Eisenmann is in the house.
Thank you, Ron. Well, good to be with you again.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio, as long as I can figure out all these computers. We got this new system. I hope you're appreciating the new technology that we've got going now. I'm not trying to drive you crazy with the pictures, but we do have some new pictures that we're able to show up on the screen. We're able to show you some charts on the screen. And if the radio host can figure out how to get his computer working, I think they'll be pretty good. I think you'll like them a lot. I'm glad to see somebody there is appreciating them. But we are watching them all the time. Let's check and see what, and be aware so you'll know it's something new on here. You can actually put your comments right there on the Facebook page, and we can actually see them here in the studio. We might even share them right there on the live broadcast. Let's take a look and see what we're celebrating today. We always have something to celebrate. Some days are better than others. And I must admit, I'm looking at today's celebrations, and I am a little bit baffled because I don't know what the heck they are. National Fluffer Nutter Day. I've never even heard of a fluffer nutter. You're the same? Okay, so I don't feel quite as bad. We've got National Pierogi Day. I think I know that one. I'm not sure, but I'm going to have to get some pictures of all of these because, I can't read, so I can tell what some of the pictures. I can look at pictures here and see. So a fluffer nutter. Okay, it's a some food stickier than others. It's from Somerville, Massachusetts, invented with a sweet marshmallow spread called marshmallow cream and peanut butter. How can you go wrong with that one? I mean, that looks like a pretty good one. Pierogi Day, it looks like it's a little bit of chicken dumpling type item there. So we're 2 for 2 today. I can handle both of those. Touch Tag Day. Now, we better be careful of touch tag nowadays because I'm not sure that we're allowed to touch anybody. So I think we got to be careful when we start seeing Touch Tag Day. Sergio, good to see you on there this morning. I see you right there. We can actually, we're going to use Sergio's comment. I think we'll show if test our system. Oh, what do you know? It popped right up on mine. A little bit of delay there, I think, on the site. But Sergio, glad to see you with us. I have to get you and Kelly back on the broadcast one of these days real soon. Let's take a look at what else is going on in the marketplace. Stocks, bonds, mutual funds, tweets. It's kind of fascinating nowadays. It used to be I could get up at 4, 3 o'clock, 2 o'clock in the morning. Yes, if you are a male over 55, you understand about that every 90-minute wake-up call. So, and I'd watch and see what the markets are doing, but until you get the morning tweets, it really doesn't matter. So today we're looking at the Dow Jones Industrial Average down quite a bit. Now, we would have expected some different numbers, or down 277 as we speak. NASDAQ down about 100 points, S&P 500 down 35. We would have expected some different numbers than what we're seeing today based on the just straight reports that come out. But when you try and handicap the markets, it's a little bit more challenging when you're trying to handicap the markets and the tweets. Just throwing that out there for you. And the political correctness of our society today, it is in my opinion, it's a scary world, right? I mean, you watch and see what's going on and what is happening with the Twitter mobs and what they're up to. Can you imagine? Now, I have had the pleasure of going and seeing many past presidents in my career. I've been able to see Bill Clinton. I've seen Richard Nixon, Jimmy Carter. Recently, we were able to see George W. Bush. But did you notice the latest of the Twitter mob going out there? Ellen DeGeneres at a event sitting next to George W. Bush, and the Twitter mob gets on her. Shouldn't there be some sort of free speech? I mean, she came out and said that she doesn't agree with everything the president says, everything the past president does. But does that preclude somebody from sitting with a former president? I had an interesting conversation. Those of you that have been listening to me for any length of time know that I was not a fan of President Obama, but I was a fan of the President of the United States. I hoped everything that he did was successful. I didn't agree with the methodologies, but I think he had the right intention. Again, I just didn't agree with his methodology. I know of somebody that was a graduate of UC Irvine when he was the commencement speaker, and they said they did not want to go. And I'm just thinking, well, would it be possible? Could I possibly have your ticket?
This is ridiculous.
Right? If you have the opportunity to see a president of the United States, whether you agree with them politically or not, there's only been 45 of them. Right? I mean, to me, I felt pretty foolish that I didn't take the opportunity just recently to go see Justice Gorsuch when he was at the Nixon Library. There haven't been a whole lot of Supreme Court justices. You take opportunities like that if you have any interest at all in being an educated individual. Right? If you want to go out there and just talk like the Twitter mob does and just throw out things that you have no clue what you're talking about, okay, so be it. There's a lot of people that are that way. But if you have an opportunity to see a president, to see a Supreme Court justice, to listen to and see a chairman of the United States Federal Reserve, right? Those are opportunities that don't come around to everybody. I highly recommend you take advantage of them. I've done it whenever I could. I recommend you do the same. But going and chastising Ellen DeGeneres because she's sitting with the president or former president of the United States, does that make any sense to anybody? I don't get it. But we're watching a new environment right now. We're watching an environment where we have to be very, very careful because we're on a slippery slope. Now, I was just a wee little one back in the early 60s in the days of Berkeley and free speech. But think about what's going on right now. The general manager of the Houston Rockets makes a comment on Twitter supporting the folks in Hong Kong. And now all of a sudden, the entire business, the NBA, the business of the NBA, is in trouble in Hong Kong. There are teams over there right now playing basketball, and they won't show the games live in China because of the support that one employee of one organization made on Twitter. Now, albeit NBA teams, they're high profile, but what would that do to your business? What would that do to your job? If you made a comment, you work for the Disney Corporation, and you said something like that. You work for some other big company, and you make a comment like that, and it can cut out, 4 billion people from being in your marketplace? That's not free speech. We've got to be careful of what's going on here. We had the Secretary of Homeland Security go to George Washington University to talk about immigration. Now, who knows more about what's going on today in the world in immigration than the United States Secretary of Homeland Security? I may have Department of Homeland Security, right? And the loons in there would not let the secretary speak, would not let him deliver his speech. And worse than that, here's what I find worse than that. The school administration did nothing. They asked, please be quiet. Can you imagine something like that? Now, I know when I was a kid, if I got up and started speaking out of line, my dad had a very, very swift method of changing my direction. Can't do that right now. So when we talk about today being National Touching Day, well, touch tag, it might not be allowed. I'm just throwing that out there. I'd love to see what your opinions are, and we can actually share them now right here on our broadcast. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. What FICO score do you need to qualify for a mortgage? Can private student loans garnish wages? October 15th, it is tax day. Did you know that? All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay will be available, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star has the programs. They've got the products. You've got the phone. Make the call. I actually just had somebody yesterday that I was chatting to. One of the private clients called me, And they said, you know something, I'm thinking about buying a new house. And my wife and I make very, very good money. They're in the top 1% of the income earners. But they didn't want to go out shopping for a new house until they had been pre-approved. And I said, hallelujah, people are listening. It still amazes me how many folks are out there going and getting going out shopping for homes and have not been pre-approved or pre-underwritten before they go through that process. It baffles me how many real estate agents have missed didn't look down at their business card, because I know a lot of real estate agents. I've seen a lot of realtor business cards. I have not seen any of them that say tour guide on them, right? I just don't see that. If you're going out looking at properties or showing a lot, maybe you're going to show one property just as a courtesy to somebody. But if there's an agent that's going out showing you 8 or 10 properties and they haven't asked you if you've been pre-approved or seen some sort of documentation that you're a cash buyer, I'd be concerned about the agent, because they're not doing you any justice. And if they're not, it's bad that they're not doing you justice. They're not doing any justice to their own family, right? Because that's how they make a living. Just throwing that out there. So what's happening in the mortgage market right now? Well, here's the issue. We saw stocks down very, very early this morning in the pre-market. That all had to do with the U.S. and China trade talks, some of the issues going on. U.S. blacklisted at least 8 Chinese technology companies. China says they're going to retaliate. A lot of this, so you'll know, is being, unfortunately, understanding the Chinese environment. I worked over with a lot of Chinese companies in my prior life, so I understand a little bit about the Chinese culture. The things that are going on in the United States House of Representatives is strengthening in their mind the Chinese hand. They believe that all of this, that the damage that the House of Representatives is trying to put on the president is weakening the president, so they're going to push for more and more. That's just the way the culture works. So every time you hear another comment from Adam Schiff, the chairman of the Lack of Intelligence Committee, Jerry Nadler, Nancy Pelosi, all of these things are just strengthening China. They are, and I think that's why the president says that it's treasonous, because we are in a trade war. Just throw that out there. Producer Price Index, though, here's the issue. The Producer Price Index, which generally would have been more favorable because it's showing that we have a minimal amount of inflation. Sorry about that, Tariff Hawks. But it's showing a minimum amount of inflation, was improved today. National Federation of Independent Businesses released their optimism number. They're not doing as well, so the economy is slowing down. CoreLogic released their loan performance report for the month of July. Still very, very strong numbers. There's not a lot of distressed property. We did talk a little bit about the 30-day delinquency having gone from 3.6 to 4.0, which was not good. This month it's back down to 3.8, so we're not seeing a lot of delinquencies out in the market. Again, today we're going to hear from the Federal Reserve Chairman Jerome Powell. A lot of stuff going on, but that is the Mortgage Minute, brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, give me a call, 800-306-1990. But let's talk. I shared this with you. I share this with you on a regular basis. I give you all these different numbers, and I can tell you about the national scene because that's the research that comes out. The national numbers are the research numbers. But what does the national numbers mean to you sitting at your home in Orange County, California, in the Coachella Valley, California, San Diego, California? Maybe I'm even a little off there, Lynda. Maybe Orange County is not even a good indicator either. What does it mean to you if you're in Brea, California? Because real estate, I suggest, is really a lot more local than it is. The national numbers give us an overview, but real estate is really more of a local issue. What are you seeing in the marketplace? Are you seeing properties staying on the market longer, shorter? Is there a price point that's moving, not moving, that you're seeing out there?
I think overall we're seeing most of the properties staying on the market a little longer.
Okay.
I think it's, and I've said this before, I think we're in a more normal market than what we were in the past.
What does that mean?
Well, I mean, for one, that properties are staying on the market a little while longer, and there's usually some negotiability. Negotiable.
Yeah, it's negotiable.
Whatever.
Something along those lines.
As far as the price is concerned. And, I was thinking about it driving over here today. And just as I say something like that, I had a situation about a week ago.
I love stories. It's the best way of us learning.
Well, it's just one of those things that, like I said, I think we're in a more normal market. But I had a buyer who I've been working with off and on now for a while. And they've really been sitting on the fence for the most part for a long time. But now I think they're finally ready to go ahead and make the move. And they called me on a particular property, and it was brand new on the market, starter home,
Okay.
a $500,000 starter home, because we know that's what we're at in Orange County, right?
And I've got some friends in that we mastermind with in Delaware, and they hear our prices and they just fall over.
Oh, this is a first-time home buyer price range for the most part. And get a load of this. It's a 3-bedroom, 1-bath home built in 1951.
Wow.
Very, very typical starter home for the area in general. They called me on it. I called the agent. It had been on the market about 24 hours. He said, Lynda, we have 9 offers on it.
Wow.
So with that, my buyers decided not to look at the property, knowing that there were already 9 offers on it. And within about 2 days, it was sold. And I thought they listed it at a realistic price to begin with, but it sold for $40,000 over asking.
Okay.
Now, and again, I said, I think we're in a normal market, but I don't think that was a normal experience for the market today. But it just had enough of appeal, and there's enough first-time home buyers out there looking in that price range.
Which that's a fascinating conversation, because I'm hearing from the agents I talk to around is that if you're in the 600-700 and down, or the 1.2 and up, properties are selling quickly. That midpoint is where we've got a little bit more normalized from what I'm hearing. And again, I don't sell real estate. I just do a little financing, a little radio show in the morning, right? So I get an opportunity to talk to a lot of people, but that's just in that mid range. And I talked to some agents, and you answered my biggest question before I got to it, was how was the property priced? Because you hear a lot of agents now that are pricing extremely aggressive in order to get that bidding war going.
I didn't think it was that aggressive. I thought it was priced very realistically.
Okay.
And so I don't think it was under market by any means.
Wow.
Not any means at all.
And how long ago was this?
This was last week.
Last week. Okay. So now let's use this. We'll do this, especially because you've got a first-time buyer that you're referencing. And we get a lot of people that don't understand this part of it. Now, that property was listed for $500,000. It sold at $40,000 over.
Correct.
And you've got a ton of experience looking at it and said, okay, I think it's priced properly at $500,000. Do you think it's going to appraise?
I think it's questionable whether or not it'll appraise, but I think they probably had a buyer with a big enough down payment that they're not that concerned about the appraisal.
Let's explain that to people about the down payment part. Right. So explain that part to me, because you've got to, when you're going into this environment, right, you have to, an experienced agent is going to be talking about the idea, okay, it's priced properly.
Yes.
Right? Because you're not going to want to go out there with your client and have an unrealistic expectation. Now, if it's priced, they sold it for $40,000 above asking, as the agent, you've got to be having that conversation with your client saying, are you prepared if it does not appraise? So how does that conversation go?
Well, I'm assuming they've had that conversation in the very beginning. And even the listing agent, a strong listing agent is going to know it's not likely that's going to appraise. But there's a very strong possibility that this buyer either had a large enough down payment, or maybe they were all cash. So the appraisal may or may not be an issue. Generally speaking, it normally is, but not in every case. And there are times where somebody's really interested in a property, whether or not it's going to appraise. And I have a property myself that I own, and I bought it without appraisal contingency because it didn't make any difference to me if that property appraised $10,000, $20,000, $25,000 less. I knew I still wanted that property.
So you're able to buy a property, because a lot of people have the misconception that, something, if the appraisal doesn't come in, I'll just walk away because I don't have to buy it, which they don't, because
if it's a contingency. That is correct.
And some people like yourself in that scenario you just outlined, the appraiser's opinion of value is only meant for the security, for the investor.
Pretty much for loan purposes, correct.
And you have the opportunity to say, I'm willing to pay more because you wanted that property.
That's correct.
And the seller is able to say, I'm not willing to take any less because they already own the property.
Yes.
Right? So they can, so the value of a property really, in all instances, is what, and the way they define it actually, even in economics, what a willing buyer is willing to pay a willing seller.
Willing buyer, willing seller, absolutely.
Right? And the appraiser is just looking for the collateral value for an investor.
Well, the way I explain it to buyers is that the appraiser will normally confirm the value. The appraiser doesn't pick a figure out of the air. They usually confirm value based on what the buyer was willing to pay. Now, does that mean all appraisals come in? No, because there are times that an appraiser might feel the buyer has overpaid on something, but the appraiser doesn't pick a figure out of the air. In my opinion, they try to confirm the value or the price that the buyer's actually willing to pay.
Now, take it one step further. We only got a couple seconds. I've already run over. Sorry, John. But the concept here is the fact that there were 9 offers. Mm-hmm. Will that have any bearing on the appraised value in your experience?
It could.
Okay.
In a minute, I'll explain how it worked out for me once before.
Okay. Perfect segue. Okay. Love that. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we're going to chat more with Lynda Eisenmann. We're going to talk about buying or selling above the appraised value. How does it work? We'll get into that. What FICO score do you need to qualify for a mortgage? Can private student loans garnish your wages? All that and more. You can reach me anytime. Our off-air number, 800-306-1990. 800-306-1990 or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com, or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. If you already found your dream home, good for you, but do you want to know what the county recorder knows about the property? Do you want to know what the market believes about the property? SLT Home Digest. Text SLT Home Digest to 79564. Find all that information out. It is totally free, a service from your friends at Ron Siegel Radio. What FICO score do you need to qualify for a mortgage? Common knowledge that your FICO score plays an important role in the home buying process. However, many buyers have misconceptions regarding what exactly is required to get the loans they need. While a recent announcement from CNBC shares that the average national FICO score is high, the good news for potential buyers is that you do not need a score that high to qualify for a mortgage. Let's unpack the credit score myth so you too can become a homeowner sooner than you think. With today's low interest rates, many believe now is a great time to buy, and rightfully so. Fannie Mae recently noted that 58% of Americans surveyed say it is a good time to buy. Similarly, the Q3 2019 home survey by the National Association of Realtors said 63% of people believe now is a good time to buy a home. Unfortunately, fear and misinformation often hold qualified and motivated buyers back from taking the leap into home ownership. According to the same CNBC article, I quote, "For the first time, the average national credit score has reached 706, according to FICO, the developer of one of the most commonly used scores by lenders," unquote. Great news, as it means Americans are improving their credit scores and building toward a stronger financial future, especially after the market tumbled during the previous decade. With today's strong economy and increasing wages, many Americans have had the opportunity to improve their credit score over the past few years, driving this national average up. Since Americans with stronger credit are now entering the housing market, we are seeing an increase in FICO score distribution of closed loans. I shared a graph earlier that tells us about some of these different numbers and what the percentages are. I'm looking at about 48%, 50% from 750 down. Yes, if you have a 500 FICO score, you can get a loan. 550, 600, there are 1% of the people get loans in that range. 600 to 649, 8% of the people. 650 to 699, 17%. So the answer here is that the opportunities are there at almost every FICO score. And I've shared many, many times with our private clients, we don't believe in telling somebody that you don't qualify because of a FICO score. The answer is maybe we need a game plan to help you get to the right score. And sometimes it can take as little as, 3 to 6 months to get that to happen. So a lot of opportunity out there. That is the real-time real estate segment. Again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. And if you already have that dream home, very, very simple. Go out there and get our Home Digest, SLT Home Digest, 79564. Continuing our conversation this morning, Lynda Eisenmann is in the house. We've been talking about what happens if the appraised value of the property is not as much as you've agreed to pay for the property. So, Lynda, you're starting to share with us your own example
Well, what I was going to share is we had a situation on a property that I had for sale. It was new on the market. We had it open. We had a very active open house. Within a couple of days, we had multiple offers on the property. We listed it at what we thought was the peak of the market. Or I was in the ballpark, I guess, near the peak of the market or at the peak of the market. Never anticipating that we would have the activity that we did. And we wound up with multiple offers. Some very strong offers, a couple of weak ones that we threw, one weak one in particular, I think we threw out at the time. But we did have doubts about the property appraising. So when it was appraisal time, I met the appraiser out there. The appraiser went through the property, measured what he normally would and so forth. And I said, he asked me about the price. And I said, well, I want you to know that this property, and I had examples of them right there on the center island. I think we had 6 or 7 offers laying there. And I said I had 1 or 2 lower offers, but I have 5 offers all in this price range. So this is not a fluke. This isn't a wild guess offer from a buyer. This is not a fluke. We have a range of 5 other buyers in this price range. And I wanted him to know that this just wasn't a single offer. I wanted him to know that enough other buyers out there felt strongly enough about that property that it would warrant that kind of price. And because I believe I had the evidence of the other offers physically there that he could see, we just looked at page 1 of the purchase agreement, page 1 of the purchase agreement, and so on, and we got our appraisal.
Interesting. So a couple of things to unpack from your comments. There's number one, you must have a experienced listing agent who understands how to make how to deal with the market, deal with all the negotiations that happen. You're not going to get that kind of a deal or personal touch with the now defunct Purple Brick.
I would agree.
Right. Some of the other online services that are offering just cheap service. And you get what you pay for, right? I mean, if you want the Walmart of real estate, fine. Walmart's a great company. But you're talking about something very, very expensive. When you're talking about $500,000 starter home or whatever the price value was, if you're in Orange County, you're probably talking median price is $800,000.
I would agree.
So
I would totally agree.
Need to have professional guidance.
Well, that's the case where what I mentioned before your break, that the appraiser does not pick a number out of the air. They want to confirm or affirm what the buyer basically paid for it.
Right.
And what I wanted that appraiser to know is we had enough buyers in this same price range that were willing to pay for it. So the value must be there.
And that proves one of the comments that was made many, many times during the mortgage meltdown, the real estate meltdown, was there was some potential of collusion, right? And
yes.
You can't, if you've got 5 offers there that are all signed and executed, different real estate agents,
yes,
you can't have a buyer and seller colluding to have the property value at a different proper value than it
I
was.
totally agree.
The other question is I'd love you to get into, from the representative side of as a representative or the agent working for a seller, you in that instance had multiple offers. What did you look out to guide your seller to what was a weak offer versus what was a strong offer?
It's not just the price. There's a lot of elements to an offer. And the price, number one, yes, but we're looking for, I look at the earnest money deposit. How much money is that buyer willing to pay upfront to secure that property? And it may seem like a very minor thing, but I think—
when somebody's experienced like you, I think you got to listen.
I think so too.
Okay.
But I look at the deposit. I look at the buyer's qualifications or everything as far as I'm concerned. I mean, why would you accept a higher offer that has a very little chance of closing? It just doesn't make sense.
Okay.
For most people.
Right.
Put it that way. But we look at all the price, terms. We look at additional conditions, a lot of different factors when you're considering an offer. And do the time periods match? Is that buyer willing to wait or be able to move in when it's the best time for the seller? Or is the seller willing to make a compromise for a substantially higher offer?
So that's the information that a lot of people think, well, all that the seller cares about is the price.
Not necessarily.
Right. And you're giving us some great guidance right there, because I would have not thought of the earnest money deposit.
Well, what you said about the seller looking at the price, you're absolutely right. And one of the things I do is when I meet with the seller for the first or maybe the second time, I actually take a residential purchase agreement, one of our California Association of Realtors, RPA is what we call it for short.
Okay.
And I take my highlighter and I take the yellow highlighter and I said, as a seller, most of the sellers look for the price and they look at the escrow period. In other words, how much am I going to get and how long is it going to take me to get it, or when do I have to move?
So out of the 14-page document, they're looking at the first third of page 1.
Yes, they are. But I'm looking at a lot of other things on the offer. And I also take my highlighter, a different color highlighter, and as their agent, as their representative, I highlight all the other things I'm looking at. I'm looking at, like I said, the earnest money deposit. I'm looking at how much is the total down payment. What's the loan amount? Do they have an interest rate locked in there? What other contingencies are there, and how long are those contingencies going to remain?
And that's the guidance. I just had this conversation over the weekend with another individual, and they were saying they didn't understand exactly what the real estate agent does today. And because they said, 20 years ago, we needed a real estate agent to tell us the price of the property unless we saw it in the newspaper. And we had to have the real estate agent show us the property because we couldn't see it any other way. And nowadays, right, we can see the price. It's up front. I mean, it comes in our emails every day. If you're working with a great realtor, they're going to be putting you on a campaign that anything that's in your price range is going to get sent to you anyway. Right. There's probably another 40 other websites that are going to send you the information if you breathe properly, even if you don't breathe properly. Yes. But in listening to you, the guidance, the way the real estate agent makes their money today, in my opinion, is guiding us through all of these other issues that we don't necessarily think about.
Navigating the transaction.
There you go. That's a perfect analogy.
One time realtors we were the keeper of the data. We were the keeper, the treasurer of the properties. Well, that's the complete opposite now. Complete opposite. That's our least value to consumers, is providing them the data.
So I use another analogy every once in a while, and it's probably not a good one, is you don't need a lawyer to get in trouble. No. Right? You can do that on your own. Right. It's you need the lawyer to protect you. And here's kind of the same thing.
That's a good one.
Right? Is you don't need the realtor to find the property. You need them to really protect you from all the laws, and especially in a state like California where everything's litigious.
You're right.
Interesting information. We're going to take a break real quick, come back, chat more with Lynda Eisenmann. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Can private student loans garnish wages? And I bet you thought April 15th was tax day, but for many people, it's actually October 15th. We'll talk about that and more. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, shame on you, but the replay is available, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams, or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals will have a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meet.
A home. Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has these solutions. Jeff Sipes and the team over at Credit Sanitizer do a great job for our listeners of Ron Siegel Radio, correcting your credit report, following the laws, making the creditors responsible for following the law on your credit report. Can private student loans garnish wages? The average student loan debt has risen to $31,172. A heavy weight over individuals who are ready to move on and experience life. Ignoring student loan payments for more interesting pursuits may be tempting, but defaulting on your student loans can have disastrous consequences. Yes, it could include wage garnishment. If you're one of many Americans struggling to pay back private student loans, here's what you need to know about wage garnishment and your options for avoiding it. The biggie is the difference between federal and private student loans. Federal student loans and private student loans both help you pay for higher education, but they have distinct differences. Federal student loans have fixed interest rates, are guaranteed by the government, and include a range of protections for borrowers mandated by the Higher Education Act. Private loans, also known as alternative loans, are issued by banks and other financial institutions without any federal direction backing from the federal government. Because private loans are not subsidized by the government, they're not regulated as closely and often carry higher interest rates and fewer protections for the borrower. Want to reduce your student loan payments? Compare options. Give us a call at 800-306-1990. We will tell you some of the options that are available for you. I don't get involved in the business, but I do study it, have some information and people you can talk to. So if you default on a private student loan, well, it's kind of like defaulting on almost anything else. You're going to have to go through collection. You might end up going through a litigation. And at some point in time, if the debtor prevails or creditor prevails, you may end up with a wage garnishment. So be very, very careful right there about with the private student loans. But there are some other benefits. You might want to talk to an attorney about that as well. You also want to know, just from a separate point of view, I did want to make this because I just saw this morning, and I wanted to get this information out as well. Don't forget, October 15th is the day. If you filed an extension back in April, October 15th is the tax filing date for the extension. So just be aware that day is coming up quickly. Don't wait until that morning to call your friendly CPA or tax planner. Make arrangements if you can't afford the build, but file the forms anyway. That is the Your Credit Matters segment, again, brought to you by creditsanitizer.com. Jeff Sipes and the team at Blue Water Credit, they do a great job for the listeners of Ron Siegel Radio. Continuing our conversation this morning, Lynda Eisenmann is in the house chatting about the Preferred Home Brokers, the name of her company.
Thank you.
I gotta get that in there. I don't think I even mentioned that earlier.
It's okay.
But we've been talking a lot today about the marketplace and the potential of a normal market. Lynda, I'm going to share this also, and I don't know your opinion on it. We don't talk about a lot of the issues before we get onto a broadcast. It's better for us to just have an open dialogue. You're just eavesdropping on us, having an open dialogue. You're the beneficiary.
Yeah, I never know what you're going to ask.
we don't pre-plan it. It's not like I send you out, here's the list of questions we're going to talk about. But a normal market, I'm going to suggest that there are the vast majority of realtors in the marketplace today have never experienced a normal market. Right? They experienced, if they've been in the business for 10 years or 12 years, maybe even 15 years. 15 years ago, we're talking about 2004 and the start of the real estate boom, which really was not normal. Right?
You're right. It was one of those spurts.
Right? You get into 2008 and you start seeing the real estate crash. Mm-hmm. And most of us were not around in the late 20s, the 1920s. Right, so we don't remember that the Great Depression. We might have heard stories and read it in textbooks. I don't know if they're even teaching that anymore. But we went through that the years of having multiple offers, of having distressed property, of having huge amounts of foreclosures. Now it's 1 out of every 400. At one time, it was pretty much 1 out of every 3 or 4 was a distressed property. And if you've only been in the industry 15 years, 10 years, you may not know what a normal market even means.
Well, I would imagine if you've been in the business 15 years, you probably would. But I think we go through a couple of mini cycles every 10 years, quite frankly.
Okay.
It seems like mini cycles, MINI cycles. Okay. Where properties seem like they're flying off the market and flying off the market, yes. And then there's other times where they'll sit for a while. So
when was the last time, just throwing it off the top of your head, and I don't want a specific date, obviously, that you saw properties that are just sitting for a while, unless they were priced just completely ludicrous? Do you remember how? I mean, it's been a while. It's
been more than a few years. Yeah, right? Yeah, I would agree.
And now, we normally consider a normal market from a technician standpoint, 6 months of inventory on hand, give or take, right around there, right? It's not exact science.
That or maybe a little less in Southern California.
Okay.
You think?
4 to 6 months?
Yeah, I would think so.
So, do you see right now properties sitting on the market 4 to 6 months? Because I know you told me that you go out and you preview properties on a regular basis.
I do. I look at property continually. It's a matter of knowing the inventory.
Right.
Is what it's about.
Which just fascinates me all the time, because yourself, and I know a lady that's here in Anaheim Hills that comes to our caravan every Friday religiously.
Yes.
And when we first started the caravan 4 years ago, we weren't educated enough to put the properties in a circuitous order.
Okay.
And she kind of laughed at us because she said, just sitting in the meeting, looking at a piece of paper, she said, well, why are we going from one side of the hills to the other side of the hills, back to the first side? I said, holy cow, Karen, you can really just by looking, you know all these addresses.
I know who you're talking about.
Right? I said, you're better than the UPS man.
Yes, she is.
Right? And so you've seen the properties probably in the area in Brea that you're at most of the time. You've probably seen or maybe even sold the same properties over and over again.
We absolutely have.
But you're still, after this amount of experience, you still go out and look at them all the time.
Well, I think the market constantly changes.
Okay.
And today's value may not be tomorrow's value, or vice versa.
And so that's one of those things that I reference on a regular basis, is that even though you've done this for as long as you have, you know the market, you know the streets. I could probably tell you, if I knew the street name, I could probably say, what's the color of the house at 123 Main Street? I don't know the name of the street, so I can't ask that, right? But you're still going out there looking at these properties, and you're able to do that because you're a full-time realtor.
Yes.
right? If I'm doing this spare time, part time, and maybe I sell one house or a half a house a year, I probably don't have that market knowledge.
That's all I do, and that's all I've done for decades now, and I still love my job.
And that's the important part, right? I mean, because
I still love my job.
I'm guessing that with as many years as you've been doing it, you wouldn't be doing it this long if you didn't love it, right? I mean, because I watch you out there, following you on social media, follow Lynda Eisenmann, and bike riding, golfing. You got a lot of other habits,
yes, I
traveling,
do. Yes,
but still very active as a realtor.
Yes.
And I love it, the idea, because now you're probably second or third generation where you're helping families.
Absolutely.
And
matter of fact, the buyers that you're working with right now are repeat clients, but they're also second generation clients. And
that tells you that you're doing it right. Like that's what whenever I have a repeat client come back to us, it makes you feel good because you know that we know going in that we're doing everything we possibly can. But it's gratification when you get that confirmation from somebody else. If you want a great real estate agent, give me a call at 800-306-1990. I'll put you in touch with Lynda Eisenmann. Now it's North Orange County. We used to just say North Orange County, but North Orange County and the Eastern Coachella Valley.
Yes, that's right.
Both areas out there. So give me a call. I'll put you in touch with Lynda. And make sure you set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.